Good afternoon, everyone. You're all very welcome to Thursday's US market open. So today we're going to be looking at the price action, obviously in the wake of the ECB interest rate meeting earlier this afternoon, which we'll be talking about it in a second, and of course factoring in the volatility from Fed Chair Powell testifying yesterday. The Fed beige book that came out last night, which we saw a little bit of a market reaction from, which we'll be chatting about shortly. And of course, Fed Chair Powell testifying again today. So I suppose the best place or the first place to start off today is by looking at the ECB. So as expected, we talked about this on Tuesday and we've talked about it for last week. That idea of all of the central banks holding interest rates for longer into the summertime period looks very much set. We've seen the ECB as well today, along with the RBA, Bank of England, and obviously Fed and Bank of Canada over the last week or so, or last week and month, holding rates at current levels. Now, today, as we've seen, the ECB has held its two rates, so the main refinancing operations rate and the deposit facility rate both being kept at 4.5% and 4% respectively. So basically, in Europe, the status quo remains, and the ECB has, like a lot of the other central banks, kicked the can down the road. So overall, there's really not much of a market reaction because, of course, that's what we were expecting. We weren't expecting any decreases yet. And as such, we've seen a little bit of an upside in indices, but overall, a fairly muted reaction as we kind of expected. Now, going back to yesterday, I think the bigger moves yesterday visible within the market dynamic is on two fronts. So obviously yesterday we talked about when we done the Joe's numbers, there was a little bit of a downside correction. We found our bottoms, which we talked about in yesterday's Zoom, and then we actually started to see the markets rally into the Fed beige book announcement at 7 o'clock. Now, as it turned out last night, we did see that little bit of a moderate correction at 7 o'clock off the Fed beige book numbers. We actually started to see the indices decline as well. So those earlier market movements that was visible through the course of the day from the US session open, from the Jones number, so that 4 hour period was very, very quickly undone by comments out of the beige book and obviously just market sentiment more broadly into the close. So that propelled all of the indices back into those session lows, back into the lows of where we traded at yesterday and where we've traded at actually this week. So that was the running team this week, is to evaluate and understand price action at these lower levels, at these lower bound ranges, to make sure that they actually held up. Now, as it turned out today, on the open today, we did see a little bit more buying coming through. We've seen that been reciprocated into 130, into the ECB, and of course into 230, where markets are opening higher. So indices on the cash price market today will gap higher from the London Open this morning. So we're seeing that across the board. We're seeing S&Ps move higher. We're seeing the NAS move higher. We're seeing the Dow Jones move higher. So basically that risk orientation that we saw yesterday afternoon is now back in play again. And we're seeing those assets and those instruments obviously grind higher steadily through the course of the afternoon into US session. So the goal now is to make sure that those movements become sustained through the course of the afternoon, because of course, looking for buying opportunities now when the S&Ps is up 40 points, when the NAS is up 150 points, 130 points, and same with the Dow Jones being up considerably, you're not going to get much face value there because of course you're buying the highs. So that's where we're obviously going to look at price action into 3 o'clock, bringing back in those value areas in the day, which we'll be talking about shortly, and ascertaining a clearer bias, particularly as we said with Fed Chair Powell testifying today. But overall, the consensus this week of the question that we asked on Tuesday was, or will the stock markets hold up at those regions, that those lows that we identified earlier in the week? And so far they have. They've held up relatively well, which is again feeding into this longer term narrative of buy side cycle, bearish correction, next wave extension, and then of course looking for those gradual pullbacks, those declines back to those prominent liquidity areas. So obviously we mentioned the Dow Jones at 38,500 this week. We've seen a very, very prominent bounce. We're now sitting 300 points up on that zone. The NAS from that 800, 850 level, it's again sitting a modest 200, 250 points up. And the S&Ps also from the 50-50 handle that we talked about down here, it's also holding up considerably well, as we are approximately 80 points higher from where we were at the lows of the week. So overall, you have to say indices, broader trend is still obviously focusing on that. And we mentioned that yesterday, we mentioned it on Tuesday, focus and stay with the trend, right? If the broader trend is bullish, unless there's a complete alteration in trend structure, and we break that down very, very clearly, then of course, stick with the buying trend that's in play. So that then brings us then to, as I said, the market dynamics across the board. So we're seeing US indices grind higher. Obviously, with that, we're obviously looking for that weaker DAX or weaker VIX play, should I say, which we saw obviously spike lower initially at the earlier parts of the week, but that's been undone as we see the VIX obviously leveling out. So that kind of spike that we saw off of those weaker indices last week, or obviously the early parts of this week, has obviously abated somewhat, and the VIX is obviously moving lower again. So we talked about it on Tuesday. We talk about it quite regularly. If the VIX is moving lower and you can see that sentiment coming through, there's absolutely no reason why you should be selling the indices, because we know that there's a very clear correlation that when volatility is reduced or volatility is lower, you look for that kind of optimism, you look for that kind of more exuberance and sentiment coming through in the buy side in the indices. And as we see it here at the minute, the VIX play is still very much moving lower. So that gives us more optimism to look for buying through the course of the afternoon. But as I said, we're looking to then evaluate areas of price discovery from an entry perspective today. So if we look at it, we can see obviously the point of control. If we take the S&P first and foremost, around that 5090, 5100 level, there's been a lot of consolidationary movements today before we had that spike through the course of the morning, latter morning, early afternoon. So from what I would take on that point of view, given that we've obviously taken the highs from last night just prior to the beige book, we would also be looking to see, well, if there's any sort of short-term recovery to the downside, you're probably going to look for price discovery back to 5100. So if you're being patient on the sidelines, waiting for areas of opportunity from a value play, you're probably going to look for price action to see, can it migrate back down into yesterday's point of control, which is coming in around about 5110, to those lower regions, which is probably around about 5095, 5100. So that would be the area of interest today that a lot of traders will probably be focusing on, myself included, that if there's any sort of correction, that's probably where I'll look to take the price action higher, because of course we have bullish broader trend moving higher, corrections back to those liquidity areas, that's also been checked out. Successive highs being created yesterday, successive highs being created today. So we know that the price action is grinding higher. It's just about waiting for those kind of corrections, short-term corrections, like what we saw yesterday at 3 o'clock. We got the spike, we came back down, we found price discovery, we found a value area, and then of course we took the next wave higher. So those are kind of simple things to look at to mitigate FOMOing into entries and buying at a session high when most likely it'll probably correct, which we see often time and time again. And it'll also help with your discipline, it'll help with your psychology, and it'll also help with your risk management. So things like that gives you better angles for entry, which will make you more efficient in the long run. Same exact thing can be applied in the NAS. Now, just bear with me for a second. So the two blue lines are session highs and value area highs, value lows. But again, taking it out, similar scenario, consolidation breaks out. We talked about last week, got the correction back to the value area. We've created successive highs both last night and of course today. We've created a correctional pullback last night into the FOMC or beige book data. So now we're looking to see, can that create a short-term pullback, short-term retrace, and then look for that next anchor leg higher. Okay. If you look at the NAS, yes, there's nothing to stop these movements just continue to exuberate and continue to progress higher through the course of the afternoon. But you have to ask yourself, are you prepared to buy at a session high? Or are you better off waiting to see how the market dynamics sets up in the first 30 minutes, wait for those little bit of a correction, a little bit of those short-term dips, like what we saw yesterday from 2 to 3. And then, of course, evaluating price action, because we know by 3:30, we have a fairly good idea of where the price action is going to move for the rest of that trading session. So keeping it simple maintains that discipline, but maintains that efficiency in the back end as well. So as I said, NAS is sitting at 150, 150 on the price action perspective. So we're obviously looking at that closely today. If we do see a correction, I'll be looking for short-term movements back into 18,000, 1825, maybe even 1850 if it's less aggressive, and seeing if there's any sort of a short-term correction. Because as I said, it doesn't probably make too much sense from a value per play to try and take this higher from here if there is the potential for another pullback, as we saw it yesterday playing out. So may happen, may not happen. But again, being prepared for all eventualities to obviously take corrective action. Same again in the Dow Jones, obviously very, very aggressive, finding those lovely bottoms here just above the 500s, creating short-term highs yesterday. Nice little correction back to yesterday's value area, which did revise up slightly through the course of the afternoon, but we found our lows from the original value area, which was down here before we had that spike. And we found that bottom clearly, condensely, and structurally speaking, very, very exuberant. And then of course we picked ourselves higher through the course of the morning, and as I said, into 2:30 over the last hour or so, we've continued to maintain that. So if you look at the last couple of half-hour candles in terms of price discovery from the ECB, and of course from the data prints in the US at 1:30, we can actually see that the indices are grinding higher. So from that perspective, what I would say is today the big clue is yes, we know provisionally speaking that the value area, the point of control is down here. Same with the NAS, same with the S&Ps, but there is potential for these to actually work their way up. So as price action accumulates at higher prices through the course of the session, there is the susceptibility that that moves higher. So you should be watching that closely. These are provisional. They will change through the course of the afternoon if price action is consistently trading above that for larger durations of time, which gives us then areas of correction should we see short-term pullbacks between, as I said, 2:30 and 3 3. So obviously watching that closely. And as I said, with Powell testifying, who knows what can come out. We may see a little bit of, all we need is one negative comment, and then all of a sudden the S&Ps, the NAS, the Dow Jones could be off 100 points, 150 points. Very, very easily that can happen, as we know he tends to move the markets. Now, moving out of the indices into the FX side of things, just to tidy that up, we know obviously with the VIX side of things, that was obviously moving lower. We saw the indice exuberance this morning and obviously initially yesterday between 3 and 7. But that has obviously had the dollar sell-off. So that dollar sell-off was initially visualized yesterday. We took out that kind of consolidation between kind of 103.6 and 104. We've broken down considerably through the course of the day. We're now back to almost 103. And as a direct result, given the dollar is now finally starting to break out of its range, we've seen upside progression in euro dollar. We've seen upside progression in cable prices, and we've seen a little bit of shorter term selling optimism from the sell side perspective in dollar yen, where it's broken back under 150, that level that we've talked about for the last number of weeks, back into 149 yesterday, of where it's currently trading today. Now, if we look at current price action today, we were through 149. And we are now expelling aggressively to the downside. So those are the types of plays that we're looking at. I've talked about dollar yen, this area, for many, many weeks now. We're just waiting for that reaction. Of course, we got it initially yesterday, and we've seen that secondary expulsion of price action to the downside coming in through the course of the day as well. So that again, weaker dollar yen, stronger euro dollar, stronger cable prices is very much being visualized in the back end. So now it's a case of, given price action has broken out of this kind of medium-term range for the last month, is there kind of a short-term relief rally? Is there now a short-term relief rally back up? Let's wait and see. But at this point in time, the dollar yen is starting to see a little bit of movement off of that key psychological level, which we talked about for several weeks, which is obviously around that 150 handle. Same again in cable prices. We've seen it migrate higher. We talked about 127.50 earlier in the week. It's still steadily moving higher, back into this range where we've kind of identified here between 127.50, excuse me, and 128. So that's going to be a focal point really for the rest of the week. Given as well tomorrow, what have we got that we haven't talked about in today's Zoom or even that much this week? NFP, right? So we've got NFP tomorrow, main US employment figures out for February. Again, that's going to be an interesting thing because, of course, if you listen to the Fed Chair Powell's comments yesterday, one of the things that he said was resilient and steadfast labor market. So again, is that meaning that tomorrow's NFPs is going to come out solid and overall pretty good? If it does, that's probably going to help indices, and it's probably going to bring even more residual weakness back into the likes of the dollar and potential weakness again in the volatility index like the VIX. So that's going to become incredibly interesting tomorrow as well. Other than that, obviously we're seeing the euro dollar kind of grind back into 109. I do fancy this to go a little bit higher, particularly as well, as I said, if tomorrow's NFP comes out higher, better, and indices start to grind higher, you're probably going to see euro dollar go back up to 110. So looking at the markets, I think I'm going to cherry pick opportunities for the rest of the day, stay out of the FX side of things just until we get those deeper corrections, and then obviously look at NFP tomorrow as the data comes out, because as I said, tomorrow will be a fairly volatile afternoon, I would suspect. And given, of course, we've had some fairly strong movements in gold recently. We talked about it, the 2150 level. We broke through 2150 yesterday, late last night, through the course of the early parts of this morning, and we've actually gone up to 2160. So this gold trend, like we've seen in the indices, like we've seen in a lot of these other plays, is now continue to grind higher. And now it's a case of like, well, where do you find value? Where do you find optimistic entries to get in that you're going to actually create value rather than buying a top scenario? And I think at this point in time, you just have to look at those legs. So obviously we've had aggressive extension, short-term consolidation, never mind the pullback, next wave higher into this short-term consolidation, followed by third leg higher. So at this point in time, if you're looking at long entries in gold, you're probably looking for those apex like structures that we talk about in our calls and our zooms, where we're finding moves back to at least these short-term liquidity areas. But at this moment in time, these trends are so goddamn bullish that we're not really getting any sort of correction. Even here, short-term consolidation, little to no correction, grinds higher, consolidates at session highs, which is, as we said today, above 2050 on gold. So gold is stuck between 2150, 2164, 65 to be exact on the wick highs. And even as I said, even in the first 15, 30 minutes of the open, again, showing that there's a lot of residual volatility here in gold, but stuck to this point of control around 2155. So that's pretty much where we are at the minute. As I said, on those S&Ps and Nas, they just continue to grind higher. So we're not really getting any sort of medium sized corrections or pullbacks yet. But again, we want to make sure that's a little bit more sustained, because how often have we seen price action extend and then see those corrections? So at this moment in time, I'm not chasing any entries in the S&Ps, Nas, or Dow Jones higher at session highs. I'm going to wait and see if there's any sort of negativity. If it doesn't come, I'll be letting those opportunities pass by on the day, because of course there is the likelihood it may continue grinding higher. But again, you need to try and ascertain risk reward and finding value rather than just FOMOing in without any clear structured plan in line with that. All right, that's pretty much it, everyone. As always, trade safe. We'll be on the wires through the course of the afternoon, particularly as Fed Chair Powell is speaking on front of the testification. So obviously looking to see if there's any additional comments coming out from that, or if we're going to just see a steady continued grind higher back into what could potentially be new all-time highs coming in this week. But if we see a strong closure tomorrow, it sets up the possibility of another weekly all-time high, and that's obviously something that we've seen for the last 2 months or so continuously. All right, have a good afternoon, everyone. Trade safe.